Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on August 23rd. So it's been a quieter, but still a constructive week in my book. I think the major indexes, as I record this, are up a little bit, call it 1% on the week. We're rallying today on some Jerome Powell, saying they're going to cut rates in September, which everyone kind of thought anyway. Yesterday saw a little distribution for the first time, so on and so forth. Just stepping back, I would say, the evidence obviously has gotten a lot better the last 3 weeks. Intermediate term trend-wise, without getting into all the details, we basically need to see things higher than they were 5 weeks ago. And so next week will be key. If we can kind of hold at these levels or ideally build, go higher, then most indexes that haven't already will click, and most growth measures that haven't already will kind of click into a green light, okay? So that's something to watch next week. I think more important to me is I continue just to key more off of individual growth stocks, a lot of which just have gapped up on earnings, act well, they keep gapping up on earnings, and there's been no give back. Even if the indexes don't give back much, we all know that these individual volatile stocks can have a 5 or 8% pothole or something, but we really haven't seen any of that yet. Could it happen next week? Of course. To be fair, not all the evidence is, great in my opinion. The defensive stocks, consumer staples and utilities and big cap healthcare like defensive healthcare, those look pretty good. So, we'll see how it goes. I'm still not ruling out some sell-off reverberations, maybe sell the good news here on Jerome Powell. We'll see how it goes. But overall, I'm definitely more encouraged than not. In Cabot Growth Investors Model Portfolio, we put a chunk of money to work last week, some more money to work this week. We're about 38% in cash. A lot of the stocks we were able to hold on to are acting great, knock on wood. And, ideally, like I said last week, hopefully next week it's 25% and then 10% and then 0%. We're just fully invested. So we'll just take it day by day, week by week. So far, so good on the rally, although I wouldn't say it's, decisively 1,000% like the correction's definitely over, but I definitely like what I see, okay? So let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So here's the NASDAQ, and we've recouped with these indexes as much. Today we're a little bit lower, but, we've recouped something like 2/3, 3/4, sometimes more on some of these indexes. So even the NASDAQ here is holding above the 50-day line. What I was saying about that 5 weeks ago thing, this is the 25-day simple moving average, which we use. People say, why do you use the 25-day instead of the 21-day or the 20 or the exponential? Or we took 50 and divided it by 2. We kind of keep it simple. There's no magic answer here. But we like to see this sort of tick up. And if you count back here, it's 25 days ago is up here. So if we can hold in this range or obviously ideally build on it, then that will turn up. It's nothing magic. It's just a trend measure. Okay, but we do like to have obviously the intermediate term wind at our backs before getting too heavily invested. The S&P 500 and NASDAQ composite look really good. The S&P 500 is almost out to new highs. It would make sense that there's some resistance in here, whether it's the NASDAQ or any of these things. You're just kind of right back into prior highs, moving averages, depends on the chart you're looking at. So let's see what happens. We had a little bit of selling yesterday. This is all very short term. Today we're seeing a little bit of churning as I record this. I don't know where we're going to close, but maybe, like I said, maybe there's some sell the good news, right, with the Fed. And let's just see if we pull back, how we pull back, that sort of thing. But so far, obviously, so good, okay? The New York Composite moving out to new highs. I think that's a good thing, right? That's sarcasm. And then small and mid caps, so this is IWM. They're having a good day today on the Fed. They're more rate sensitive, of course. So again, just very impressive. Whatever, no matter what you're looking at with the major indexes, they all fell like this. But even the worst of them have kind of recouped, say, more than half. Some of them obviously are out to new highs. Some of them are here, but it's all been pretty, constructive action, okay? Growth is a little bit, at least the measures are a little bit more mixed. This is the IBD 50 index kind of into the 50-day line here. Chip stocks, you can see this is the SMH kind of into the 50-day line here. But other things, it's the same sort of thing though. Other growth measures, like here's the mutual fund index. This is real money mutual funds. It's a little bit hard to see because everything on this chart is blue, but it's the thick blue line. Here was your peak. Here was your sell-off, mini panic, whatever you want to call it. And now we're almost back to new high ground. What was another one? The IPO fund, which is, not totally, it's a risk on measure, I guess I would just say. So, not out to new highs, but certainly, certainly you'd be happy if I told you this 2.5 weeks ago that the fund would be up here, right? So growth measures look pretty good, okay? On the flip side, just a couple of things, because to me, it's really about what I'm seeing with individual stocks, XLP, now some of this, Target gapped up this week, which I think is in this index. Walmart has gapped up on earnings, but it is what it is to me. You can't excuse things. It's been up a bunch of days in a row to new highs. XLV is the other one. This is more like Johnson & Johnson, United Health. This is like the stocks in this index. It's not like, small biotechs. And so this is kind of moving to new highs too. That, to me, this isn't ideal. It's not like a death knell or anything. It doesn't overweigh all the other evidence, but it is something I'm keeping an eye on. You'd love to see these things just maybe stall out a little bit or just underperform. And they have underperformed since the low, you can see, but it's a little bit, you just wonder if a lot of institutions are still saying, okay, I have to be invested, but I don't really want to go buy, chip stocks and networkers and software and stuff like that. And that can have some ramifications. So that's just something I am keeping an eye on. And the other thing, of course, is interest rates. I mean, the Fed is getting all the news and what the Fed's going to do, but Treasury rates, peaked here in April, and they've been kind of coming lower and then really accelerating lower here. Now, obviously, some of that was due to the market meltdown and the yen carry trade and all that garbage. But either way, they're almost back to their lows. This is the 10-year note, and just this 38 level, which means 3.8%, looks like it's pretty important. To be fair, like the 5-year shorter term treasuries, this is the 5-year note, has already come through that level and is kind of holding below it. But either way, I think it's safe to say the intermediate and possibly longer term trend of rates now is obviously coming down, which doesn't mean anything for the market for the next week or 2 or 5, but longer term, it's a tailwind for the market, okay? In terms of individual stocks, again, I'm seeing, if anything, let me just go back to the NASDAQ real quick. If my fingers work. If anything, a little bit of, be careful what you wish for, right? You say you want some hesitation. Next thing you know, the market's really selling off. But if the market can kind of hang in there and some of these stocks can chill out a bit, we're starting to see some of that in a few names, it could really set up some, I don't want to say like perfect, but, really low risk entry points, okay? So in the biotech space, there's a bunch of names, or I'll say medical space. But this is ARGX. I've mentioned it before, ARGX. It is liquid, $30 billion market cap. There is some old overhead here, but I'm sort of keying off 12 weeks up in a row, big sales, earnings kind of are a surprise. All of a sudden now they're profitable. They're going to be profitable. And here you have 2 weeks. It's kind of hard. You have to kind of squint to see it. Kind of 2 weeks down on very, very low volume after this big volume ramp. It's still extended. It could definitely shake in if the market does, but overall this looks like something that wants to go higher, whether it's, sooner or later. And there's just a bunch of names in here. This is ALNY, ALNY is the symbol. Again, this is a huge gap on trial results, which is always tricky, but this is a big company. They had $650 million in revenue last quarter. Okay, so they're not making money, but it's a real company. Obviously break out to new highs and just holding pretty firmly in here. Now, again, at some point, maybe you get a test. You will get a test of the 50-day line at some point. So we'll see how it goes. But that's one. A little bit hotter potato is this is TG Therapeutics, which is TGTX. This was in top 10 this week. Again, you have some old overhead from back here, kind of middle of last year. But it's really been acting well in recent months. And then, again, kind of tennis ball action. We wrote about tennis balls and eggs. The old, when things correct, you want to see them bounce like a tennis ball as opposed to splatter on the floor like an egg and just sit there and not be able to get going with the market. TGTX obviously looks like a tennis ball, first on earnings and then just on follow-on buying. I think there was some news there, but just holding very firm. That's the other thing as we go through some of these charts is just like in ARGX, there's been, a couple days here, obviously, and all this, but it's just been no real weakness. It's not like, things broke out and then they went up another day, but then they're down 4% and then they're up. It's just kind of very under control, okay? Into some of the technology names, which is not, I still think a lot of these things need time to rest, but I am sort of noting, this is Taiwan Semiconductor, TSM. Okay, the original breakout was in January, I think, or February. I think it was January of this year as opposed to like last May. So it's a little bit fresher. Obviously, it got hit with the sector and everything, but found support at the 200-day line. And it's holding here kind of like the NASDAQ, sort of, there is overhead to chew through, but it's holding at the 50-day line. I'm just noting it because, some other, like NVIDIA looks pretty good, so to speak, in here. But a lot of the chip names like an ARM, not so good. And the chip index, not quite as good. But TSM is one of them. Arista Networks is one that I would have thought would not look like this. But again, we are on the weekly chart. It's 5.5% as I record this off its highs. And what just kind of stands out to me is it's actually been up maybe. We'll see how it closes this week. But it's been blue 4 weeks in a row, maybe this week too, okay? And, that's pretty impressive. 4 weeks up in a row, given we're only 3 weeks off the low. So, to me, that's kind of an impressive thing with the stock. And again, it's just kind of sitting here. It's not really pulling back at all. It is sloppy. There is overhead to deal with. But that looks pretty good, ANET. And then smaller ones like this is ZETA, which has been in top 10. You're not in the first inning here. The stock has been on the weekly chart, ramping here for a few months. But clearly, the stock wants to go higher. It got, broke out here ahead of the market correction, had 2 bad days, but couldn't even get down to the 25-day line. And here it is tagging like closing highs up here. So that looks pretty good. Construction and housing. I'm sort of branched out a little bit in this video just because we've talked a lot about a lot of the growth names. But this is Granite Construction, just kind of trending higher. Kind of broke out a few weeks ago on the daily chart. You can kind of see this flattish structure breaks out, gets I guess it's down 1 day during that market fall. And that's it. And then it's just kind of kiting higher from there. The home builders kind of took an exhale here. They ramped, they corrected, and then they kind of didn't really rally initially, but now they are. This is Toll Brothers, TOL. This reported earnings this week. DR Horton, you could ETF it too, whatever. But DR Horton, it's the biggest one. It looks good. They all tend to swim together. And you can just see it just kind of exhaled here, but just down to the 25-day line, and now it's ramping again. Ideally, you play these things on pullbacks. Here's a sector I almost never talk about, but gold looks pretty good. This is Agnico Eagle Mines. AEM, it's one of the leaders. You can see it bottomed back here, a few months ago, and really has just been, handling itself well. You wouldn't know all these worries are going on in the world and you hadn't carry trade. It just looks fine, continues to act well, shook out a little bit. Obviously, this was the market correction right here, but it held the 50-day line and just up a bunch of days in a row since. Barrick Gold is another one, GOLD. This one's not as strong like overall. You can kind of see it's been sort of in this base building area, but just recently I flagged it because of the because of the tennis ball like action here, nice volume on the upside, or just GDX is the ETF for them, not quite as strong as some of the leaders, but certainly looks fine, perched near new high ground. Okay, and just a couple of other things I'm noticing is just off the bottom. This isn't something I personally usually play, but I'm just noticed. So Shopify was. I don't know what the term is. I don't want to say it's a leader, but it definitely was one of the ones that got destroyed, right? It went from whatever it was, 400 down to 40 or whatever the hell it was, but had a really solid recovery. Okay, it wasn't 400, it split. I might as well get my numbers right. Let's do this. It went from 160 down to, say, 25. So it's a pretty big decline, obviously. Came back to 90 and then just kind of fell apart again. But right after the market correction, I think it was right after or the day after, or a couple days after, you could see it was that week. It gaps up on earnings hugely. Now it had fallen hugely, but notice how it gapped and it's just run higher since then. A lot of these things are doing that. We can come in next week and these things sell off. We can absolutely do that. And there's probably a decent chance that there is some correction. But so far, the way that they are acting is like all the sellers are already out. And maybe for Shopify they are because the stock went from 90 to 50. But you're just seeing a lot of this sort of action. So this is kind of a bottoming thing. I mean, there's some resistance here. It's not really my perfect setup. I'm just sort of flagging sort of a name that has good numbers, liquid, obviously, institutional support, and is really showing some unusual strength. And then Uber, which, is kind of a more well-controlled sort of Shopify, was hitting new highs here. And this is kind of almost like a big sort of double bottom with a big shakeout. Then it reports earnings that day, gaps up, and again, it's just sort of kiting higher. And yes, it's rested here, but again, if you're watching this on an iPad, you're probably like squinting to see what is it doing. It's just very, very tight in there. And again, maybe it just needs more time. It doesn't do anything, but I'm just noticing some of these big liquid names. The numbers are still great. The estimates are great. The sponsorship's great, but the stock's kind of crapped out for 3, 4, 5, 6 months. And now they've really changed character potentially on earnings. Okay, so there's a lot of stuff like that out there. Like I said, next week will be key for the market as a whole. Honestly, if you had to draw it up, you wouldn't mind a little bit of this, and then September 10th or whatever, it's boom, it's go time, and everything breaks out, and we all make money and retire and buy mansions, of course. But the market doesn't care what we want it to do. So far, I think next week what I'm going to be looking at is, does it hold in here? Does this 25-day line turn up for some of these indexes? And do, more importantly, some of these individual stocks I mentioned, participate. There's not rotation. There's not, movement into only defensive stocks, stuff like that. Do we get some more breakouts, some more leadership, some more, it doesn't have to be earnings gaps, but really strong volume action in some of these names. So far, I would just say it's going about as well as you could hope. I wouldn't say we're totally out of the woods. And there is a chance that we do one of these things in September and the election and stuff like that. But overall, certainly the evidence is growing more positive, especially on a stock-by-stock basis, okay? All right, that's all the time I have for today. As always, thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.